If you know you are irresponsible and you are just swiping and swiping, like, you know, once you pop, you just can't stop, like the potato chips, do not get a credit card. She's back. Rubs hands like Birdman. Well, kinda. So I said in my last video, like, I have been on fire, sis. I have been up, and all I want to do is just thrust myself into education. I want to be researching. I want to learn new things. And for a long time, y'all have seen, I've been burnt out from finances, personal finance, anything, sis. Even on social media, as soon as I heard the word budget investing, I was like, I'm just going to continue to scroll because I don't have the mental capacity for this right now. But the weird thing, and I think that the divine is just so funny. God works in mysterious ways. It's like the political stuff going on has really thrust me back into my research bag, and that has in turn like reignited my love for learning. And that was my whole thing around personal finances. It's just that I was learning and I was teaching y'all as I went, and like, I'm on fire. I'm seeing me reap the benefits. And it was a good time. It was a good time. We had a good time. Okay. We had a good time. And my main thing in whatever I do, I just want to help create equity and inclusion in spaces. And when it comes to finances, we do have differences when it comes to wealth and when it comes to financial literacy. And so I watched this video earlier and I'm like, yeah, that was the green light for me. Auntie to the rescue.
I feel like they should teach us how to file taxes, how to buy a house, how to get your career started,
how to build your credit,
how to build your credit, get your own credit card, all of this stuff, how to actually use your credit card to make it benefit you and all of that. How to manage your bank account. Credit card, how to not make your credit worse, like how to make sure your credit stays good if you have a good credit and stuff, like to make sure you stay credible.
So I'm like, okay, I'm blowing the dust off, and my goal is just to have a video in between other videos at least once a week, just dipping my toe back in there. I'm going to kind of pace myself. Like I said, I'm a little bit on fire, but I'm going to pace myself because I don't want to burn out again. But recently what I have done was I refinanced my car. Some of you who have been around for a while know that when I bought my home, I also purchased a car. So I did have Old Faithful. I did pay off Old Faithful. Me and Old Faithful, literally, we were rolling until the wheels fell off. The wheels were literally falling off, and the transmission, it was needing to be replaced in the upcoming year or so. I decided that I just needed reliable transportation. Everything was new. I'm entering a new season, and so I got a new vehicle. And by the grace of God, I have never had to use my 9-to-5 income to pay for that vehicle. Anything that I have used to pay for my automobile, and it's been 2 years, y'all, it has been excess income from social media like YouTube and things like that. So we'll say very blessed in that aspect. But recently I made the decision to refinance because Fed had cut the interest rates, so the interest rates had dropped. And what is so funny, is a full circle moment, is that with my last vehicle, I got it when I was very young. I was a day away from having my daughter. I had her the next day. I did not have any credit, and I did not know that no credit was just as bad in the eyes of lenders as bad credit, because they cannot gauge how you are going to pay your bills. So essentially you are seen as a liability to them. And so needless to say, when I got in my car, the only person that would co-sign for me, the only person who believed in me, was my mama. And she did not have the best credit as well. And with the high interest rates, you will also learn that you are paying a good chunk to interest. A good chunk of that payment is going to interest versus your principal, which is like the original amount that you borrowed. That's the amount that you want to get down, but it's not really moving because you are paying more towards interest than that loan amount. And so I refinanced the car to Old Faithful, who is known as Old Faithful. I call her Miss Mazda. After a couple of years, I was so happy and excited to get rid of a co-signer, just to feel like I'm a big girl and I can do it myself. But still, I had to, when I did that trade-in, I got back into a loan that had a high interest rate and a high payment. And when I'm saying full circle moment, to make a long story short, I refinanced. I remember I went through the process that thrust me into finances. I went through the process of trying to figure out how can I lower this auto loan amount because it is crushing me. I am a college student. I have a child, and I'm getting paid pennies, okay? I'm a broke college student with a child. And I was like, I need to get rid of this high payment. I need some wiggle room in my budget because literally my wiggle room was $0. And so it was like, okay, you can refinance. But in order to refinance, I learned as I kept getting denied, you've got to have a certain credit score, especially to get a good enough interest rate to lower that payment. And so I went through this year-long journey of trying to not only start building, but improving my credit score so that I could finally refinance. And after getting denied back to back to back, I got it up enough. It was about 750. It was about 650 when I first started. I was able to refinance through this credit union, and I had improved my credit score 100 points in 1 year. Now, I do have a video on this channel, I do believe, but I'm not going to make you dig 3 years worth of videos. We're just going to rehash it right here. And it was through this specific credit union. And I learned that credit unions were the best to go through if you are trying to go the route of improving your credit and getting better terms on a loan. Basically, banks, they have shareholders, while credit unions typically have members. And so that profit, they can pass that on to their members through like offering lower interest rates in their programs. And so I went that route. And y'all, networking, having a relationship with your bank, it is clutch, okay? Because I was like, since I already have a relationship with this credit union, anytime I need something, anytime I need a loan or anything like that, I go back to this specific credit union because I've already proven to them that I am trustworthy if you lend me something, and I have a few bank accounts through them as well. And so I refinanced with them, got my auto loan payment down. The interest rate is still about the same. When I got the car, that's when the interest rates were up and they weren't budging. But now since the interest rates have lowered, I was at least able to jump on that train. And I did that with confidence because I know that my credit score is A1. Even though I have been off the personal finance train, I haven't really been doing too much. During my time of like stepping away, I still have these habits ingrained in me. So even though I'm a little jaded, I am burnt out, I am still doing what I need to do to keep myself and maintain what I have built. And that's the tea. And I won't lie, looking at the credit score that they pulled, I'm still in the 800s. That did shock me a bit, but once again, developing these habits is kind of like riding a bike. You don't really have to think about it anymore. And this is what I want to bring to the table, y'all. Credit scores, especially for minorities, having a healthy credit score is important. And in my opinion, it is important. It can get you access to certain things. It can grant you access to certain things. It can help you to get in a home that is in a better community. It can help you to have reliable transportation. It can help you from not being crushed underneath these astronomically high interest rates. So having a payment that you can't really comfortably afford and having a term that is you just throwing money away to interest for a longer period of time, and it's not really benefiting you because that principal balance is not moving. And unfortunately, that's where a lot of people kind of get stuck trying to buy a home, trying to get reliable transportation and things like that. And the only way to do it based on their credit score is to take these high interest rates and these loan terms that are not really beneficial. But when you know better, you do better. So I am going to walk you through my journey of going from having really no credit to having a high credit score. And the way I started was very simple. So doing my research, I'm like, the fastest, best way is to get a credit card. But if you don't really have any credit established, it's going to be difficult for you to get approved because these lenders can't see how you pay your bills. Now, in a perfect world, we would be able to pay cash for things, and that may be the best route. But unfortunately, the way that this world operates, it operates on credit. And so you're going to need to show them that if they give you this loan, that you're going to be responsible enough to pay it back. And so I did get denied back after back for credit cards because I really didn't have any credit established. I just had my auto loan, which is a good start. But obviously it was not enough for them to be like, hey, we'll approve you. I will say that Capital One, whenever someone is trying to build their credit, I tend to tell them to go with Capital One. They don't have these strict requirements, and they are typically very, I don't have credit yet friendly. And y'all, you can just do a quick Google search. I am the Google search queen. You can do a Google search on the best credit cards to apply for whenever you're trying to establish credit or rebuild from bad credit. And there are a lot of credit card comparison sites that you can use to compare each credit card, if they have any features or rewards or things like that, and as well as their APR. That is something to look out for, their annual percentage rate. And basically this is the interest that you are paying over a year's time. Now, if you do not have any credit or you have bad credit and you're trying to get back in the game, that APR may be higher. And we will talk about how to avoid getting crushed by that later on. But first, you're going to need to get something. And yes, I do know that sometimes it is hard for you to get a credit card, even a credit card with a small credit limit. I started, the one that Capital One finally approved me for was a credit limit of $300. That's all I had to work with. But if for some reason you cannot get a traditional credit card, you can use what is called or apply for a secured credit card. And basically it works the same way as a traditional card. It's just that you are required to make a deposit, and that deposit is going to be your credit limit. So if that deposit is $300, your credit limit is going to be $300. Essentially, you're using your own money, but you're building credit. And you know, you can work your way up to a traditional credit card. This is how I started or suggested my brother start. And girl, once you start building that credit, finally get you your traditional credit card. Chef's kiss. And y'all, there are so many resources out there that can help you with things like this. One of them being Skillshare, who is the sponsor of today's video. And some of you may have heard me talk about them a few times, but Skillshare is the largest online learning community with thousands of classes led by industry experts across topics like finances, freelancing, productivity, and more. And there's a class called Taking Full Control of Your Finances, Budgets, Templates, and No More Debt that I've checked out. That is great for budgeting beginners and those new to the personal finance journey. But literally, no matter what you're interested in, Skillshare can help you take your career, your skills, your passions, your side hustles to the next level. And they offer what's called learning paths, which are sequential class collections to help you master a specific skill or competency. And the first 500 people to use my link in the description will receive a 1-month free trial of Skillshare. Go ahead and get started today. And once again, thank you to Skillshare for sponsoring today's video. So going back to what I did to start building my credit. So we've got ourselves our credit card. You know, whatever we can get with the credit limit is whatever we can get. They started me out with $300. And so I'm like, okay, we all here, I'm not touching a credit card because the interest rate, and then you're going to get trapped in paying all this money and it's going to interest, and now you are stuck paying on a credit card that's in the thousands, and it's just a whole ordeal, and it scars people for life. I totally get that and understand that. But what I am saying to you, and I'm holding your virtual hand as I'm saying this, if you're going to get a credit card, you need to be responsible. If you know you are irresponsible and you are just swiping and swiping like, you know, once you pop, you just can't stop, like the potato chips, do not get a credit card, sis. Work on your mental first. You need to work on your money mindset first, you know, establish some delayed gratification. And then once you feel like you're ready, that you can do it, that you can be responsible, then go that route. But the way I started was I used that credit card specifically for gas. I'm like, okay, I know that I need gas I was filling up about once or twice a week. So I'm like, okay, I'm going to use this for gas. And I would swipe the card for gas, and every payday I would pay off what I paid. So what was being sent up to the credit bureaus at the statement cutoff date, that was $0. So I was making sure that I was not carrying over a balance. They were not going to make any money off of me. And this came through my research before I even got the card. So make sure like you know how the credit card works before you go into it. But I did not want to get into that whole thing where I'm scarred for life from a credit card because I was being irresponsible and I was not paying it off full every single month. So that is how I started off for the first couple of months. I would say the first 4 to 6 months. And after the 4 to 6 months, I am, of course, checking my credit score through Credit Karma at the time. I did switch over to Credit Sesame. And I know that people have their things with Credit Karma and Credit Sesame. But it's still a good way to kind of gauge where your score is going to be. With my personal experience, anytime my credit score is actually pulled by like a lender, it is higher than what is shown on Credit Sesame or Credit Karma, but it's still a good place to monitor everything. And so after that, as I'm kind of watching the points build up, I still have my auto loan, I'm making those payments on time, I graduated to Discover. So I applied for a Discover card, and my credit limit was like $1,000. So they actually approved me. I was not denied, and my credit limit was higher. And so I'm like, okay, I'm going to use this card for food because I'm a college student. I'm eating out at the time a lot. And so I'm like, okay, this is going to be for gas. This is going to be for food. And just the same way I did my Capital One, whatever it was that I owed each payday for food, I paid that off. So I made sure $0 was sent up by the time it was at my statement cutoff date. And so I got my 2 cards. I am still paying my auto loan on time by the grace of God, barely. Every single month, making sure I have $0 on these credit cards by the time the statement cutoff date rolls around. It's typically around this date, not your due date, that you want to make sure that you have that balance paid off so that you are not getting crushed by interest, so that they cannot be making buku's a bag off of you, and then you get into this cycle where you're carrying over a balance every single month and you are struggling to pay it, and the balance keeps rising and the more interest you're accruing, and then you get into this place where now you have credit card debt. Because that was me. And it wasn't from me doing this. It was from me being irresponsible, saying, ooh, look at this credit you, like they kept increasing the credit limit that I had, and I wasn't telling them no. And so I thought that I had this money to use. That'll do it. That'll do it sometimes. So do not get into that habit. If you do, fall back, take a little break, and don't pick them up again until you realize that this is not your money. If it's not a secure credit card, this is not your money. Okay? This is like a loan. You're going to have to pay this back, and with interest if you're not paying it off every single month. And so that was it. Like, I stuck to the script, and as time progressed, my credit score was improving. And you don't have to do too much. You don't have to make it super complicated. And when it comes to personal finances, I'm someone, I like it simple. KISS. Keep it simple, stupid. I am not going to do too much. If it has 20 steps, I am not going to do it. My brain is just not going to be able to keep up. I have to simplify what it is that I am doing, and this way worked the best for me. Don't ever think or gaslight yourself into thinking that having a good credit score or saving money or paying off debt is just out of your league, that it's too complicated, because you can simplify it and throw some stank on it and do it your way and still get to the same destination that other people have without all of the extra. We have to set our babies up for success, give them what we did not have, and that for me is financial literacy. I want to give her a good financial foundation to stand on. And so next year she turns 13, and I am able to add her as an authorized user, and that she's essentially just reaping the benefits of me paying off this credit card and keeping this credit card in good standing every single month. And that in turn helps her to start building her credit early on, so she does not have to make the mistakes and go through the things that her mama did. So yeah, y'all, if you have a child and you have a credit card in good standing, go ahead and add them as an authorized user. Now, typically there is an age limit. I know with American Express, or at least my card, it is 13. She's 12 right now, so I'll have to wait until next year. I think with Discover it's like 15. Just check the age limit, and if they are within that age, go ahead, get them babies started, start building up a foundation for them so that they can have it a lot easier than us. So yeah, that's it. That's all. I feel so good, y'all. I feel so good. Thank you, Jesus. Yeah, and I'll catch y'all in the next video.